Hello everybody and welcome to the Open eCry market commentary for the week of July 1st. My name is Toby Gennaro from Trade with Precision, and we'll just be looking through the charts and seeing what's on tap for the markets this week. So let's get into the big cap stocks here on the S&P 500. Look at where the major equity markets are potentially looking to move this week. So we're looking at the ES futures contract to do that as we normally do. And we're just here working through the time frames from the top down, looking at the monthly chart. We just closed out. This candle right here represents the month of June, and then we just started up the July candle. So in looking at the monthly chart, not really sure at this point whether we're going to get a deeper pullback on the monthly chart into some of these levels, like this 1530 level. The level that we came down to here was right around 1550, right around 1553, and then we got to bounce off that level. So we can't really tell a whole lot from the monthly chart, but as we go down to the weekly chart and some of the lower time frames, we get a little bit more information that gives us some clues into what the market might be doing and how investors are reacting to this pullback. And so we can see right here that we got a nice bullish candle off of that move last week. We had a little bit more downside from the commentary early last week, and we've got a nice bullish candle right in the buy zone amongst that 10-20 period moving average. All the moving averages fanning to the upside again. Looks like the market's going to be heading long if we can get a break of this 16-14-50 level, which is the high of this bullish candle. So currently we're sitting right around 1605. If we get a break of the high of that 16-14-50 level prior to getting a break of the low of this candle, which is the low is that 1553.25, then we'd be anticipating potentially a significant move back up to the top side, probably up around that 1680 level, and then looking what the markets would have in store after that. But for right now, this market can move a lot. These candles are pretty big, so this market can move a lot within this range. So let's go down to some lower time frames and see kind of what things look like. Looking at the daily chart, we can see that that first pullback that we had was right around this level, around 1594. And as you recall, we drew a Fibonacci retracement from this most recent low to the most recent high, got that 50% pullback and a bounce off that 1594 level. That was pretty healthy. Market rolled back over again, put in a new lower low, and so then we can draw a Fibonacci retracement down from that next low up to, again, the most recent high, and then we got a deeper pullback into that 62% level. And then we can also see a lot of price congestion there in and around. There was another level there around 1568. The market kind of blew right through that. But we got a pretty healthy bounce right off of that 1554 level. That couples pretty nicely with that 62% level. And so we're moving back up and got that bounce right back up into the moving averages. So we're back in the equilibrium range within those moving averages on the daily chart. So I want to be a little cautious here. We're not sure if we're going to get another rollover to retest this level at 1554, or if the market's going to start to make its move back up to the top side. And then that's why we're looking at that 16-14 level on the weekly chart to give us an inclination as if we can break that level. More than likely, the probabilities are looking more toward the top side. If we get a break of this low level, then more than likely we might be looking at a deeper pullback on the monthly chart. But for right now, things look fairly bullish here on the weekly. That's a good-looking candle right there. And moving down through the time frames, don't really see anything different here on the 480. In looking at some of the lower time frames, the 120-minute chart, you can see on that move down to that 1550 level, you can see the nice divergence that's set up in conjunction with that. That was that 62% retracement level. Had some nice divergence setting up on the indicators, telling us that the trend was weakening at that point. We had that level, that price congestion. We had the 62% retracement level, and then also on the 60-minute chart, we had that same thing. We had some divergence there setting up with this pullback, and you can see that nice divergence with the lower lows in price and the higher lows on the indicators. Gives us pretty good inclination on a couple different time frames that we might be getting a bounce off that level, and then coupled with a couple other things here on the daily chart gave us a pretty good idea that we're going to get a bounce at least back into the moving averages. Now we'll have to see if the market's still going to push higher, and we can probably look at this week, Monday, Tuesday, to see what's going to happen there. So that's kind of what we're looking for is a break of that 16-14-50 level this week. If we can get that, then the markets might be moving back up to into the uptrending formation here across all the time frames. And then moving over to the small cap index, the Russell 2000, looking at the futures contract. And here we are on the monthly chart. Again, the month of June looks a little different than it did on the S&P 500, the ES contract. We didn't put in a lower low from the previous month of May. We actually got a higher low in place, but we didn't put in a higher high either. We actually have a lower high in place. So fairly decent rejection candle there. We can look at some of these other rejection candles that we had back through some of these other monthly candles. And so monthly chart really doesn't tell us a whole lot more. The trend is obviously still intact here, but as we move down to some of these other time frames, just like on the ES contract, we've got this nice trend, higher highs, higher lows again, and then we've got this little deeper pullback than what we had up here. Those two bullish candles gave us kind of a false break and then a breakdown through the bottom of that. Now we're getting a nice bullish candle here, just setting up in and amongst that 10-20 period moving average. So we're really just looking for the break of the high of that candle this week. And the high of that candle looks to be 982.10 with the low being at 938. So provided we can get a break of that 982 level prior to the break of the 938 level, would give us an inkling that the market's looking to potentially push higher, possibly back into that 1,000 level and beyond. Moving down to the daily chart, we can see that on this most recent lower low right here, I just redrew a Fibonacci retracement from this swing low right here to basically the swing high right here. And you can see that we have this market rolled over on the daily chart, lower highs, lower lows, but we got this pullback on the most recent lower low right back into that 62% retracement level. We had a couple levels in here that we talked about last week, that 950 level that we were anticipating. And then we had another backup level here at 933. And the market really just came back and hit a final low there of 938, which was really just dead on the nose around that 62% retracement level and just shy of that 933 level. Got a pretty healthy bounce right back into that equilibrium level in and amongst that 10 and 20 period moving average. So I want to be a little cautious right here. If this market does look to potentially roll over and retest that level, that certainly is a possibility. But we do have a very nice bullish candle here on the weekly chart, and that's really the one we're paying attention to. If we can get a break of that 982 level, more than likely there may not be a retest of this level. The market may continue to move back up to the top side. And looking at some of the other time frames, I don't see anything different here on the 480 chart. And moving down to some of the lower time frames, nothing really tells us anything, as you would expect. Some of the lower time frames are starting to trend upwards, and the moving averages are reflecting that, but nothing really low in the lower time frames. We're really looking at these higher time frame trends and looking for this strength to resume after this pullback structure back into the moving averages, and then looking to break the high of that candle and potentially move back in the direction of the predominant trend. And then looking at a final foreign currency pairing here, looking at the pound yen on the daily chart, you can see that we talked about this one a while ago. We had some nice divergence there, setting up on a nice bottoming structure here on the monthly chart. Takes a long time to develop these, very high time frame, but got a nice bounce off that, and moving averages are starting to turn up here. But the real setup here that we're looking for is on the weekly chart, as you can see, with that little trend there on the weekly chart. Obviously, this is much more exaggerated. All the moving averages getting into alignment, higher highs, higher lows, these nice pullback structures right back into the moving average zone, and then this acceleration out. Just put in a new high there, and then a nice pullback structure, which has taken basically the last month or so, month and a half. And I finally got a nice bullish candle there a couple of weeks ago, and then got another nice, very bullish candle there as well. So we're really just looking to take the break of the high of those two candles. So the initial one there was 151.917, and that's probably going to be the high. 151.917. So if we can get a break of the high of that little grouping of two candles there, more than likely we're looking to move back up to the top side there. So a really nice setup there right in amongst that 10-20 period moving average. As we can see on the daily chart, I got a retest of this level back at that 148 level, and it looks like the moving averages, if we can get a break of that that higher level on the weekly chart, moving averages be rolling back up to get back into alignment on this trend, putting in then a higher low here, and then potentially putting in at least if we can get a move back up to that 156 level, at least an equal high there, if not a higher high. Looking at the 480 chart, nothing really new there, and as you'd probably expect on the lower time frames, all the indicators and the moving averages starting to fan up in the direction of the trend, higher highs, higher lows across most of the time frames, which is always a good sign for us. So really just again looking for the break of that 151.917 level, which looks like pretty close to that. We should be able to maybe hit that this week, and then see what the market has in store for resuming this trend in the direction of some of these higher time frames there. So there's the outlook for the week. We'd like to thank you all for watching the Open Equine Market Commentary for the week of July 1st, and we look forward to speaking to you next week on the Market Update.